I want to really say that how grateful we are that we have two outstanding speakers coming to us today. And without further ado, I'm gonna do a little bit of introduction, but it's going to be brief. My name is Ali Emdad. I'm the Associate Dean at the Graves School of Business and Management, and also the founder and director of the Center for the Study of Blockchain and Financial Technology, the FinTech Center at Morgan State University. We have been in operation for about 2 years now, a little bit over 2 years. And this webinar is one of the activities that we sponsor, we offer, we host, and there are a number of other activities that we have done and we undertake in the coming year. So feel free to visit our website, fintech.morgan.edu, for more detailed information about all the other activities and programs. With that, I want to introduce our speakers today. This webinar is the first of the National HBCU Blockchain webinar series, the second year of this series of webinars. And we start with a topic that is extremely important around the world, and we learn a little bit more about it from our experts today. The two experts that we have, Dr. Ousmène Jacques Mandeng is an advisor, a senior advisor, and lead economic and financial strategy with Accenture blockchain and multi-party systems. He is a visiting fellow at the London School of Economics and an expert in blockchain. And we're really grateful that he accepted our invitation to join us. And we thank Accenture for making that possible also. Ousmène will talk more about his background and his activities and projects that he's undertaken. And he also would take us into a little bit deeper background on the why CBDC is so important and why do we need to learn about it. And he will bring the European perspective to this discussion, although it's a global issue, but we have broken it down to several components, and one of them is the European component or perspective. Our next speaker is Oriol Caudevilla, and he's the advisor to a number of organizations. He is an expert that has been around the world. In Asia, he has done a number of projects in the Middle East, in Asia, in Europe, and is on a strategic advisor to a number of companies currently. And we have requested that Oriol would present the Asian perspective, what some of the Asian countries are doing in this domain. So without further ado, I want to turn the conversation to Ousmène and Oriol, and they can go back and forth. We talk, I think, in this section, we're going to be presenting maybe 30, 40 minutes And after that, we entertain questions from the audience. And we request that the participants, the attendees to submit their questions in the chat box, and also mention what university or organization they're from. That would be helpful. Thank you so much. We're excited about this opportunity. With that, Ousmène, would you please start?
All right, thank you very much, Ali, and I'm delighted to be here. Let me share my screen and then kick it off. All right.
Very good. Yeah.
Good. Excellent. Look, thank you very much for the kind invitation. I'm delighted to be here, and I would like to thank the organizers very much for this opportunity. I wanted to share with you some fundamental aspects concerning CBDC, central bank digital currencies, and offer you a European perspective on recent CBDC projects and developments. And CBDC has, of course, seen a significant increase in interest. During the past 20 months, it was catapulted from the fringes of economic policy making to its core. In October of last year, during the IMF annual meetings, CBDC was elevated to the international economic policy agenda. While central banks started to look at CBDC in early 2016, the announcement by then the Libra Association, now the DEMA Association, in June 2019 of a possible launch of a new currency called Libra had a significant impact on the CBDC debate. Central banks realized that the payment environment may be changing fast and that central banks may no longer assume they have a monopoly of provisions of payment mediums. Something had to be done. CBDC can be understood as a major initiative to ensure central bank money is future-proof. Now, to clarify, CBDC has very little to do with Bitcoin, and I shall say that from the beginning, and with other private digital coins. While CBDC may share comparable, though not the same technology as Bitcoin, the central bank as issuer is the essential attribute of a CBDC. The high electricity consumption associated with Bitcoin also does normally not apply to CBDC. Bitcoin, Ether, Tether, and other coins may serve as payment medium. From a domestic point of view, they should be regarded similar to foreign currencies. Now, Europe is one of the leading regions when it comes to CBDC, the other one being East Asia. With Accenture, I'm working on a number of CBDC projects in Europe, including with the Central Bank of France and the Central Bank of Sweden. But before kicking off, allow me to offer you some basic considerations as to why CBDC matters and why it will come. But before I do that, I wanted to talk to you briefly, what is actually central bank money to sort of get your, to ensure, it may bore some of you, but to ensure that we have a good understanding of what central bank money really is all about. So CBDC is central bank money, of course. It means it's money issued by the central bank. In the United States, this is the Federal Reserve. In Canada, it's the Bank of Canada. In Mexico, it's the Bank of Mexico. So central banks typically offer banknotes to the general public and reserves to commercial banks. Both represent liabilities of the central bank. Banknotes, or in the US, they are called Federal Reserve notes, correspond to currency in circulation. They are bearer instruments and physical tokens and can be used in peer-to-peer exchanges by the general non-bank public, meaning ourselves. It is the only central bank money we as the general public have access to. Reserves is book money or scriptural money and consists of a ledger entry. Currency in circulation plus reserves form the monetary base, or M0. Now, if you look at this chart here, you'll see a representation of the sort of money that we are talking about. So when we talk about CBDC, it is the darker bit on the right-hand side. And if you see and look at what it means compared with all the monies in the United States, you'll find that it is a relatively small proportion of what we call broad money or money more generally, which are typically liabilities of the commercial banking system. Okay. So, central bank coexists with many monies, as I said, that are liabilities of the commercial banks. In the US, using data from February, broad money, M2, consists mostly of narrow money, which is M1, and which is made of demand and other liquid bank deposits. So M2 are mostly liabilities of the commercial banks and include demand and savings accounts that we use as a general public. So today, M2 in the US is about $19.6 trillion, or about 100% of US GDP. Currency circulation was about 2 trillion, and reserves is about 3.3 trillion. So currency circulation therefore corresponds to about 1/10, and M0, the monetary base overall, to less than 1/3 of M2. So CBDC, all else being equal, would be a substitute for currency or reserves as part of the monetary base. So money in the US is expressed in dollars, but only Federal Reserve notes are central bank money and legal tender. Most monies we as a general public are using is bank money. So your deposit at your bank is a claim on the bank that is denominated in dollars. When you pay with your debit card, credit card, PayPal, or most other means, the underlying transaction is a bank transaction, being an instruction to your bank to pay the merchant or your friend. So Federal Reserve notes are used by the general public in retail transactions, and banks use reserves for interbank clearing and for large value transactions in the Federal Reserve's real-time gross settlement system, FedWire. So the innovation with CBDC is the adoption of a digital token as a new format of money. Digital tokens exhibit properties akin to a digital bearer instrument and can be used in peer-to-peer transactions, similar to banknotes. A dollar CBDC would just be the same dollar as a banknote, but represented as a digital token. So blockchain and other distributed ledger technologies are best suited to manage digital tokens and are the preferred technology underlying CBDC. So central bank money is normally the most important money in any currency area. When it changes, it will have broad-based repercussions for the financial system. CBDC is therefore not about central banks, but about its main users that are banks, the financial market infrastructures, and us, the general public. So allow me to, I would like to say now why does CBDC matter? So you should look at CBDC as part of a greater trend towards more diversification in payments by mediums, by actors, and geography. It is about innovation, advancing new functionalities in payments, produces more direct payment relationships and more differentiated payment rails, the infrastructure where payments take place. The programmability of tokens also allows to embed the most advanced business logic into the tokens to conduct complex transactions. CBDC may not be universally better than other payment mediums, but there are certain use cases where CBDC will likely excel compared with banknotes and reserves. Now, CBDC is to support competition and resilience in payments. Token-based payments will compete with existing forms of payments, producing new entrants into the payment space and increasing efficiency for users. The token-based payment infrastructure would operate in parallel to existing systems, while it should be fully integrated to provide a greater autonomy from existing payment networks. CBDC is also a pragmatic response to serve as a settlement medium on new token-based financial market infrastructures. At the same time, it is a catalyst and lends credibility to these new infrastructures. So CBDC supports new use cases, scope and reach of central bank money, while affording central banks needed prudential controls amid the implied arm's length relationships which they entertain with CBDC users. Now, CBDC is not so much about payment, actually, but it is much more about settlement. Tokens can do certain types of transactions better, in particular bidirectional trades, such as payment versus payment, so-called PVP, and delivery versus payment, so-called DVP. It means that CBDC as a replacement for a large value payment system may be interesting, but is unlikely to provide much better performance. CBDC as a payment instrument at the point of sale may also only bring limited benefits, if any, compared with in particular some faster payment systems. And the user experience is unlikely to be altered. Also, CBDC will matter where central bank money offers needed advantages. And this is why securities trading and foreign exchange are therefore likely to be key use cases for CBDC. Now, quickly on a few projects that Accenture is actually conducting. There are many CBDC projects, and they are naturally mostly determined by the specific interests that central banks pursue. The early projects were sort of proof of concepts, notably Project Jasper by the Bank of Canada and Project Ubin by the Monetary Authority of Singapore, to test mostly if CBDC can perform the functions of large value payment systems. And then came Project Stella by the European Central Banks and the Bank of Japan to test sort of how can CBDC be used in international payments. Now, then today, CBDC projects aim to explore mostly the changing scope of the role of central bank money. And in Europe, there are two key projects, one with the Central Bank of France and one with the Central Bank of Sweden, the Riksbank. Now, the Central Bank of France project is to explore bidirectional transactions using tokenized wholesale CBDC to test whether PVP and DVP how it can be executed. That matters because central bank money today can normally not be used in international transactions, except when you use banknotes. So earlier projects like Project Stella have maintained mostly a very conventional approach to settlement. But to make meaningful advances to address in particular persistent problems in international payments, we need to rethink the role that central bank money could play. Now, in October, the ECB, the European Central Bank, announced that a future digital euro may be held by non-residents, which would allow central bank money to be used in international transactions for the first time. Now, the Riksbank is doing something very different. It's building a test environment for a krona CBDC or e-krona. Sweden has seen a significant decline in the use of physical cash. And the idea of the central bank is to offer an alternative medium to ensure the general public will have continued access to central bank money. So two different perspectives. Now, a number of central banks have expressed interest in retail CBDC, including the Bank of Canada, the Bank of England, and also the Bank of Russia, and also the European Central Bank. So a number of projects. To give you a flavor of the sort of transactions that we are trying to perform. So this diagram looks horribly confusing, but I will try to just distill a few aspects here, what we are trying to do. So the idea is CBDC can be exchanged in a simple exchange of tokens, so a simple token swap. So if you have one currency as a token and another currency as a token, then you can, by swapping these tokens, you can ensure two things. It is likely to be instant, the exchange, but it is also likely to be atomic, meaning both legs of the transactions have to take place, or both legs will fail. And that ensures that effectively we can eliminate all open positions that we have in trading of currencies, so in so-called PVP transactions. And in delivery versus payments transaction, we will have a tokenized financial instrument that will also be represented as a token, and that can be swapped against a currency token in a DVP transaction. And again, it would be instant and it would be atomic, ensuring that there is no open position and that effectively we have eliminated all settlement risk. Now, this is not to say that this cannot be done with conventional technologies, but to do it is much harder. And here, CBDC offers significant advantages to do that. Now, how do you bring CBDC into circulation? And there are a number of possible approaches. Now, the approach that we favor and that Accenture favors is one that is very similar to the distribution of banknotes. So we replicate what is called the cash cycle. So banks would exchange reserves for CBDC, being a simple substitution of central bank liabilities. Commercial banks would hold CBDC in their vaults. Because CBDC is a bearer instrument, it can be passed on similar to a banknote. On demand, bank customers can request CBDC against deposit balances and hold CBDC in their wallets, similar to withdrawing banknotes from an ATM. So the wallet holder can then use the CBDC through different applications, including mobile phone apps and others, to conduct payments at the point of sale and in peer-to-peer transfers. Merchants would receive CBDC and can hold onto it for immediate reuse, or can deposit it with his or her bank against deposit balances. The bank may keep CBDC or return it to the central bank against reserves. So the distribution model would allow to preserve existing bank-client relationships and mitigate concerns about the possible disintermediation of banks that some banks fear may come with the adoption of central banks, of CBDC. So before I conclude, just quickly pointing out to some of the debate that is taking place when it comes to CBDC. There is a debate about access, meaning who should be holding CBDC. So this is not clear. Should it be the same ones that are holding banknotes and reserves today, or should this eventually be expanded? For international transactions, for example, it would be important that non-residents would also be able to hold CBDC. The concern of disintermediation I mentioned earlier. Some banks fear that if you distribute CBDC, then banks will lose their customer base because the general public will prefer to hold CBDC rather than holding a bank deposit. That remains highly speculative to what extent the general public would really see a preference in holding CBDC. Then there's a new approach regarding fiscal operations. You may have heard, in particular in the US, there's a debate about how could CBDC or a digital dollar be used to distribute benefits, for example. Here, CBDC is two things. One, it's a payment medium, but it's also an infrastructure that indeed the fiscal authorities may use to conduct fiscal operations or smart taxation. So that's very new and something we're just starting to explore. I mentioned integration. It's key that CBDC will be fully integrated with existing core banking and core payment systems to ensure that there's a seamless operation between the two systems. We're not creating an isolated infrastructure here. Then there's interoperability. That's a key thing. Namely, one blockchain needs to be able to talk to another blockchain, something that isn't trivial at all and quite complicated actually to do, to ensure that we have the same atomic and instant transactions, not only within a blockchain, where it is pretty straightforward, but in particular across blockchains. And then there's the legal side. There's still a lot of legal uncertainty. Some countries are a little bit more advanced when it comes to what is the legal framework that needs to be put in place, what happens, and what what are the jurisdictional boundaries, in particular if you allow CBDC to be used by non-residents, so by foreigners. It's a little bit like US banknotes. Of course, a very high percentage is used offshore, where the Fed has absolutely no control of what is being done with those banknotes. Similar concerns, of course, affect as well CBDC. Then there is the medium. I said from the beginning that I see the innovation mostly in the adoption of a token format, but there are others who argue, well, CBDC could also using existing mediums or be account-based. And then there are the key use cases. As I mentioned earlier, I think it's the cross-border, which is really the most, where we have most of the payment problems, and where CBDC can make a significant offer significant advantages. So just to conclude, I'm taking longer than I should have, but to conclude, so CBDC is to do really new things with central bank money. So for money, the leap from book entry to digital token is considerable. And if money can be held digitally while preserving the attributes of the original issuer, then the scope and use cases for central bank money will expand. So CBDC should be seen as an important addition to central bank money to complement banknotes and reserves, and it will allow central bank money to serve new functions in a new financial market infrastructure and help ensure that central bank money can remain competitive and meet future demands in payments and interact with new payment medium. As such, I believe a pragmatic approach to CBDC is the most promising one, and I'm confident that as central banks have become innovators, that CBDC will come, and it will come rather soon. Central banks have a historical opportunity to sort of set a new standard for digital monies. I leave it here. Thank you very much.
Thank you so much, Dr. Mandeng, for a very, very informative presentation. We appreciate it. There are some questions that are coming. We're going to hold the questions until Oriol, Dr. Caudevilla also presents. So with that, Oriol, you're next.
Sure. Let me share my screen now. Okay, so do you see it well?
Yes.
Okay, perfect. So basically, first of all, thank you very much for having me today. It's a pleasure to be talking here. And basically, I'm going to talk about central bank digital currencies in Asia. I'm going to talk about the main projects. However, since it's going to be a short talk of just 15 minutes, feel free, any of those of you who want to learn more about this topic afterwards, to reach out to me via LinkedIn or whatever. Anyway, this presentation is quite long, as you will see, but still I'm going to share it with you afterwards on information, so don't worry about that, because you will see me like skipping many pages, so don't worry about that. Basically, I'm going to skip this part where I was supposed to talk about CBDCs in general, because Dr. Mandeng already provided you with a very thorough insight of what CBDCs are, how they work technically speaking. So this part I'm going to pretty much skip it, and then I'm going to get to the chase and go to Asia, which is like the most interesting part for all of us right now in my talk, I guess, to see how digital yuan is working, the tests in Korea and Japan, Project Ava in the United Arab Emirates, etc. So I'm going to go through them quickly, even though well, as it is obvious, I'm going to spend most of my time talking about China's digital yuan, because it's the most advanced project in the world when it comes to major economies. So when it comes about myself, I'm not going to dwell on this part for longer, because Dr. Mdad already introduced me before. And when it comes to the topic, I think the main idea that we need to get here is that, well, most central banks in the world are already working in CBDCs to some extent. When we say working on, we may be referring to doing something as basic, initial, as some basic research, but still, they are working on this area. And as Dr. Mandeng mentioned before, Europe and East Asia are the two areas in the world where CBDCs seem to be well, arising much more interest. And especially when it comes to being more advanced, I would say that perhaps Asia is more advanced basically due to China, because China started much earlier than most other countries, and well, therefore is going to finish much earlier than most other countries as well. So basically, this part, as I said before, I'm going to skip it, because I don't want to repeat what we just saw. Basically, I just needed to mention that CBDCs may be retail CBDCs or wholesale CBDCs. Retail CBDCs are those which are made to be available for use by the public at large and are the equivalent to a banknote, whereas wholesale CBDCs are those which are meant to facilitate a much more efficient central bank clearing between operations between the central bank and its member banks. Even though most tests when it comes to CBDCs are retail CBDCs tests, we are also seeing some wholesale CBDCs being tested, like, for example, Project Ava between the central banks of the United Arab Emirates and Saudi Arabia, a project about which I'm going to talk a bit later. We already spoke about that before, but there are two basic features when it comes to CBDCs. CBDCs need to be digital, otherwise we wouldn't be talking about a central bank digital currency, and they are a liability of a central bank because they are central bank money, as we saw before. So I'm not going to stop on this for much longer. Just wanted to mention here that there are possible motivations behind Cbdcs. Cbdcs may serve different purposes. And this part is very important because we don't need to assume that, for example, the digital yuan, despite being a Cbdc, is going to look and be the same as the future digital euro, if there is a digital euro in the future, or the future digital US dollar, etc., etc. And this is so because it is possible that each central bank designs and eventually rolls out each Cbdc, well, following, let's say, serving a different purpose, having a different rationale behind. So Cbdcs may replace physical banknotes. They may be used for monetary policy purposes. They may be used as a tool to improve financial stability. They may be used to promote financial inclusion. They may be used to fight against financial crime. So, for example, when we talk about digital yuan, to me, China's main goal is to try to internationalize the RMB, which is not an easy task to do, but to me, that's the main goal that the Chinese government has. While, for example, this is just an assumption, but let's say if India eventually deploys digital rupee, it may be that for them, their focus is precisely to try to promote financial inclusion. Same would apply, for example, to sub-Saharan Africa or Bangladesh, etc. So depending on each country's central bank's policies, interests, the motivation behind each Cbdc may be different. So I'm going to skip this part. As Dr. Mandeng mentioned before, even though Cbdcs are not privately issued cryptocurrencies or cryptocurrencies of any sorts, it doesn't mean that, technically speaking, they may not have certain similarities, because they do, technically speaking. For example, when it comes to digital yuan is going to use both online and hardware wallets, and it's going to use a two-key architecture system to secure transactions, which are two technical features that we see being used in cryptocurrencies. For example, when it comes to blockchain technology, as we saw before as well, it's not compulsory for Cbdcs to use blockchain, but it might be advisable for them to do so. Applied to China's digital yuan, as we're going to see, the digital yuan is going to operate on a two-tier structure in which the People's Bank of China is going to issue the digital yuan to the commercial banks without using blockchain, and then those commercial banks are going to issue the digital yuan to the general public through the use of blockchain. So these are like the two levels that the digital yuan is going to have. I'm not going to dwell on this part for much longer either, because we pretty much covered that one. I just wanted to remember what I said before, that Asia is one of the places in the world, if not the place, where Cbdcs are arousing much more interest. I mean, aside from China, we also saw Thailand, Cambodia, Vietnam, Philippines showing interest in Cbdcs, as well as Japan and Korea, which are actually about to start their Cbdc tests. And even Hong Kong, for example, Hong Kong is actually taking part in several Cbdc projects, not just the digital yuan project, because it's also part, for example, of another project called Cbdc Bridge, which used to be called Internal Lion Rock, but now it's been rebranded because it includes not just Hong Kong's de facto central bank, the Hong Kong Monetary Authority, but it also includes the Central Bank of Thailand, the People's Bank of China, and the Central Bank of the United Arab Emirates. So it's a four-site Cbdc project as well, in which the Hong Kong Monetary Authority is participating, aside from the digital yuan tests. So as you can see, there might be places where Cbdcs are being tested in more than one way, or let me put it this way, where more than one Cbdc is being tested. So moving forward, the digital yuan. As I said before, the digital yuan is the most advanced Cbdc project in the world when it comes to major economies, because the Bahamas already deployed or rolled out its Cbdc, the Sand Dollar, last year in October. But when it comes to major economies, China is the most advanced one. The digital yuan may be also referred to as a DCP, digital currency electronic payment, or sometimes you're going to see this concept referred to as in the press as eRMB or eCNY. So these four ideas, digital yuan, DCP, eRMB, eCNY, are actually the same thing. China started to test the digital yuan last year in April and May, after more than 6 years of research. They started to research in 2014, and they didn't start their tests until April 2020. And their idea is to effectively roll out the digital yuan by the Winter Olympic Games next year in Beijing. So well, it looks like we are going to have like a fully rolled out digital yuan next year, in slightly less than 1 year, less than 1 year and a half, which is actually pretty soon. The tests so far are working very well, as I'm going to explain later. And as you can see on this slide, the digital yuan is structured on this two-tier monetary system or structure, which is pretty much what I said before. Now, there is a central bank issuing this digital currency for the commercial banks, the People's Bank of China. And then those commercial banks are issuing that CBDC to the general public. DCP is going to have like many advantages. Some of them are obvious and shared by most other CBDCs, whereas some of them, like for example, this idea of creating a soft power tool is not shared by all the CBDC, all the ongoing CBDC projects across the globe. China is actually going to try to convert some of the US dollar denominated transactions in international trade into RMB denominated ones. It's not going to be easy because, as you know, the yuan is a non-convertible currency, so there are many issues behind that, but that's China's idea. And it's not only China's idea because I say so. I mean, it's China's idea because all the movements that China has been doing lately show us that this is their intention. Because, as you know, China recently signed, the People's Bank of China signed a joint venture with SWIFT, where SWIFT committed to help the Chinese government internationalize the digital yuan. China also signed the RCEP Free Trade Agreement last November. It's a free trade agreement which is going to include almost 30% of the population of the world and 30% of the world's GDP, because it includes not only China, Japan, and Korea, but also all the Asian countries, Indonesia, Thailand, Philippines, as well as Australia and New Zealand. So this free trade area is going to create a huge potential area where China is going to try to some extent, roll out its digital yuan, which is not going to be easy. It's not going to be simple because, challenging the US dollar's dominance doesn't happen overnight, if it may ever happen now. So it's, of course, going to be a challenge. So just to finish the digital yuan, I'm going to skip most of my slides, but I just wanted to mention that China has been increasing the amount of people and money involved in those tests. The latest tests took place just before the Lunar New Year in late January, early February, where we saw those massive lotteries taking place, where 250,000 people were offered 50 million RMB in total to use in certain shops in Chengdu, Shenzhen, etc. And when it comes to the tests in Hong Kong and Macau, those tests are actually going to be very important for China, because so far China has only managed to test the digital yuan domestically for domestic payments within mainland China. But the tests in Hong Kong, which actually started yesterday, as you saw in the media, I guess, actually involved for the very first time to test the digital yuan for cross-border transactions. And to me, that's the key of the digital yuan. That's the main purpose or rationale behind the People's Bank of China. Moving forward, a brief mention to the tests in Korea and Japan. Both the central banks of Korea and Japan decided to start testing their respective CBDCs early this year. They didn't do so just because China started to test the digital yuan, but of course, China being so advanced has to some extent prompted these two other countries in Asia to start their tests much sooner than expected. The Bank of Japan retail CBDC actually was started to test yesterday. So when I brought this PowerPoint a few days ago, I didn't write down that part, but just so you know it, the tests effectively started yesterday, this POC phase 1. Basically, I'm going to skip most of my slides, but I want you to bear in mind that the main idea when it comes to the digital yen is that the Bank of Japan, which is Japan Central Bank, is not planning on rolling out the digital yen anytime soon. The idea is to test how it might operate, how it might work, whether it is feasible to do it or not. But then they are not planning on doing anything else but that, and testing it. So it's different, for example, the China's approach, where China is like effectively aiming to deploying its digital yuan next year. Japan is just willing to test it just in case in the future someday they decide to effectively roll out its digital yen, but it's a different approach, as you can see. And moving forward, the last project that I'm going to analyze in just 1 minute is this one called Project ABA, which involved the United Arab Emirates and Saudi Arabia. So basically, this project was started in early 2019, and the final report of this Project ABA was published last November 30, 2020. The idea of this project was to test two different things. First one, whether it was feasible or not to issue a wholesale Cbdc to facilitate the interbank clearing payments between the central banks of both countries. And also, the second thing that they wanted to test was whether it was feasible or not to do so by using blockchain. This test involved the central banks of both countries, as well as 3 commercial banks from each one of the 2 countries. So basically, it involved the Central Bank of Saudi Arabia and the Central Bank of the United Arab Emirates, as well as Riyadh, Al Rajhi, and Al Inma from Saudi Arabia, and Dubai Islamic, First Abu Dhabi, and ENBD from the United Arab Emirates. And the conclusion of that wholesale CBDC tests were actually very satisfactory, because the expectations that were put into this project were not only met, but exceeded. They concluded by saying that it's not only possible to deploy a wholesale CBDC between both countries, and it's not only possible to do so by using blockchain, but it's actually advisable to do so by using blockchain, and it's possible to effectively deploy it. So it doesn't mean that they are going to roll out this CBDC anytime soon, but they tested it, and the idea is there, so we don't know yet how they're going to move forward. But I think the whole point, the main idea you need to get from my presentation is that most countries in Asia, or at least many countries in Asia, are to some extent interested in CBDCs. In some cases, like China, they're interested in effectively rolling out CBDC next year. In some other cases, like Saudi Arabia or Japan, they are testing, or they just tested their CBDCs, and we don't know yet whether they are going to roll it out or not, but at least the interest is there. So basically, to conclude, it's pretty much what I said, and also the fact that I don't mean that China invented CBDCs or anything like that. It's not like that, but of course, China being so advanced is somewhat prompting or encouraging other Asian countries to try to move a bit faster. So that concludes my presentation. Thank you very much, and let's move now to the Q&A.
Okay, wonderful. Thank you so much, Dr. Caudevilla, and also Dr. Mandeng. Very, very informative presentations. I'm thinking that our faculty colleagues will use these videos of this session and use them in their classes, because this is extremely informative and actually sparks the interest further into this exciting area. So there are a couple of questions, and we're going to be reading these one by one. The first one was, can we have a copy of the presentations? And we said that we'll get them if they kindly allow us to share that with the audience. We will do that. Post them on our website for them. And the video of this session and all the webinars will be available on the FinTech Center's website. The first question is, what is the potential strength of CBDC over DAO? So Dr. Oriol or Ousmène, either one of you want to address it?
Sure, I can kick it off if you want.
Yeah.
Well, I think, and I hope Dr. Mandeng agrees with me, we need to look at CBDCs from a different angle than when we look, for example, at cryptocurrencies, and any other decentralized finance instruments. At least to me, they both serve different purposes. I mean, CBDCs are central bank money at the end of the day. I mean, they may have like different rationales behind. As I said before, I mean, we may be a central bank, maybe testing them and deciding to effectively roll them out, let's say for monetary policy purposes or to prevent financial crime, etc. But at the end of the day, it's central bank money. So the rationale behind the CBDCs are precisely that one. I mean, it's not coming like to, how to put, like it's not the same idea as any privately issued cryptocurrency, because cryptocurrencies are part of this DeFi, decentralized finance movement, whose rationale is actually the opposite from CBDCs, because CBDCs are central bank money and therefore controlled to some extent. I mean, to some extent they're going to be controlled. Well, of course, that's going to depend. I mean, some people raise some privacy issues. I don't think we need to be too worried about privacy or anything like that. But still, the idea is, of course, that idea of control, because it's central bank money, whilst cryptocurrencies are per se, well, non-controlled, I mean, decentralized. So in that sense, I think that they both serve this different purpose, and that's what makes difficult now to compare them, because it's not like, oh, I don't know whether I'm going to invest on Bitcoin today or a CBDC. Well, I mean, it's nothing like that, because you may invest in cryptocurrencies, for example, because, well, they are a digital asset that has shown to be very profitable, at least lately, while you're not going normally to investing in CBDCs. It's a different idea, different approach. So that's why I think it's difficult to compare both of them. If you ask me, like, what's the potential strength of CBDC over any decentralized asset, well, I would say that it's more reliable now, in the sense that being issued by a central bank means that you are not prone to any, let's say, regulatory change that it's going to make that money you have is like worthless the next day, because it's central bank money. So, I mean, I think that's pretty much it.
Okay, very good. Thank you. Let me go to I think we have several questions. So the next one is, if the CBDC holdings is decentralized from central banks, commercial banks, other financial institutions, and to individuals, how would authentications and securities be maintained at levels below the central bank?
Okay, let me take this one. Look, the idea is, first of all, I think I fully agree with Oriol's earlier point. Think of CBDC as, it's the same, again, it's the same Federal Reserve note, but it's in a digital format. That's really all it is. So it has really nothing to do with Bitcoin or other privately issued coins. But now, if CBDC will likely be brought into circulation, not on a public blockchain, but on a private, on a permissioned blockchain. And in a permissioned blockchain, you will likely have the central bank as operating a node, and then probably the entities that are supervised by the central bank, mostly financial intermediaries, banks, will also operate a node. And then it's the nature of the blockchain to ensure that the validation of the transaction is met, and the decentralized nature of how the system will likely be set up will also ensure that there is the highest level of security to make sure that there cannot be any fraudulent sort of transactions. So it is a system where the central bank will share the integrity of the network, and therefore the validation of the CBDC in circulation with the financial system. That is part of the advantages, because it is by its decentralized nature that this will become a much more robust and resilient system to external shocks. Given it is decentralized, it means that even if part of the system is down, it can still continue to operate, rather than, as it is the case today, if the highly centralized system, in particular the large value payment system like FedWire in the US or Target2 in Europe, if they fail, then everything fails. So the idea is, think of it as it is a permissioned network where every node will be operated by a different party, and its in its entirety, they will ensure that all transactions are valid and secure.
Thank you. The next one is, will CBDC affect MMT, modern monetary theory, that deficits do not matter to countries who pay their debts in the currency they print?
I can take it. Look, CBDC is a priori, again, nothing will change, right? In terms of the conduct of monetary policy. CBDC may exhibit certain features which may make it more conducive to sort of, for certain monetary policy objectives. But in principle, there is no reason why, say, CBDC would be more suitable to a very expansionary monetary policy than, say, the current policy instrument. So again, it is not because we're using a new medium that we necessarily will conduct different types of policies.
Okay, thank you. The next question is, what societal value could CBDCs have over existing, well-researched and evolving DeFi DApp platforms?
I can take this one.
Yeah.
Well, basically, I think it's pretty much what I said on my previous question. No, basically, they are like serving different purposes. No, I mean, it's hard to compare CBDCs with DeFi platforms because we are talking about different realities. No, I mean, the idea of CBDCs is not to let's say, to escape the control of any government or central bank, or to be as decentralized as possible. No, so that's why, being two different realities, it makes them different to be compared. What value could they add? Well, I mean, it's what we said before. No, this idea of being a central bank money, this idea of being much more control, and also this idea that I mentioned before. For example, when it comes to financial inclusion, you cannot, or it's very difficult to promote financial inclusion through cryptocurrencies, while it's going to be relatively easy to do so with both CBDCs and virtual banking. So maybe I would say that the most or the biggest value it will bring will be when it comes to financial inclusion, especially in certain countries.
Mm-hmm. Very good, thank you. The next question you've already answered, is CBDC like another cryptocurrency? There's a question from Azubaik from Hudson Tillotson University in Austin, Texas. He says, if the CBDC holdings is decentralized from central banks, commercial banks, and other financial institutions and individuals, well, it's a repeat of that question. I'm sorry, I have to go to the next one. The question is, majorly, the speaker spoke more about the strengths of CBDC. What are the weaknesses, and how can CBDC curb corruption?
Yeah, I can talk. I mean, yes. So what is the major weakness of CBDC? I mean, we haven't, there is still hesitance when it comes to the adoption. And there is hesitance because, of course, if we were, to deploy a blockchain, there is still uncertainty as to the robustness of what is still a fairly new technology. And obviously, particularly when it comes to central bank money, the trust that all transactions, are performed orderly is obviously absolutely essential. Hence, there is a bit of hesitance when it comes to that. So I think a weakness is this is a new technology. There's no doubt about it, and to some extent, central banks may want to be really sure and safe that the technology is mature enough in order to meet the extraordinary sort of performance and scalability requirements that are needed when it comes to payments. So now, another weakness is that to some extent it does require, you know, a new infrastructure. You know, you would need wallets. You would need to ensure integration at the point of sale. You know, you would require new custody sort of infrastructure, as well as the tokens would be held similar to you holding your banknotes in your physical wallet. You know, they would have to be held electronically. It means banks would have to offer this infrastructure. So all of this, and in particular when it comes to banks ensuring that they can intermediate CBDC effectively, it will require obviously additional effort. And I wouldn't call it necessarily a weakness, but it's certainly part of the extra effort that is needed to make sure that CBDC can circulate, you know, in an orderly fashion. And quickly on the corruption thing, I think what CBDC will certainly provide, and there's a tension, of course, between privacy and transparency. It would be, you know, all transactions are digital and hence they are traceable. And therefore, you know, you could imagine that the sort of things you can do with physical cash, which is untraceable, you couldn't do with CBDC. Now, you still want to afford certain privacy in transactions, but it, you know, it depends the sort of privacy you can actually, or you want to provide. There is a possibility providing considerable transparency, at which point corruption, for example, would be far more difficult, certainly much, much more difficult when you compare it to cash. So this is, you know, if you want to use CBDC in a world in which there is no cash, because that would have to be a necessary condition, because otherwise, you know, you can always switch to cash. But in a cashless world, you know, you could safely assume that CBDC would make corruption much harder. But, you know, it depends on the social preference of how much privacy you still want to offer your citizens, of course.
Very good. Thank you. We have time for one additional question. How will the CBDCs be dominated in cross-country transaction? Will the CBDCs affect the balance of trade of countries?
Or like I take it first and then look, I think as a payment medium, the one thing with CBDC is when it comes to international payments, this is really, I think, where the power of CBDC, we create a new spatial dimension, you know, for central bank money, and that should help to make international payments easier, more efficient, smoother. And it could also allow to lead to more confidence when it comes to you know, a settlement. So will it have an effect on the balance of payment and on trade? Well, it could, if we can ensure that with CBDC we have more orderly payments relations. We have a better liquidity in conducting payments. We may equip more currencies with the ability to serve. You know, Oriol mentioned that the renminbi, one of its key objectives is the renminbi internationalization. I believe absolutely. So it is a more diversified payments environment, international payments environment that may ensue from the adoption of CBDC. Then CBDC will improve international payments a lot, actually. It is, I think, it is certainly one of the key working assumptions as to why it's so important to pursue CBDC.
Very good, very good. Dr. Mandeng, you're on the committee, on the Bretton Woods Committee. What is?
Yes, I'm a member of the Bretton Woods Committee.
Yes, you're on. So you're a member. What is the perspective from Bretton Woods on the on CBDC?
Look, you know, I wouldn't be able to speak for the committee, but what is certainly is interesting is the debate of linking CBDC to how can it improve the international monetary system, you see. And the points I mentioned earlier and the point Oriol mentioned as well regarding the renminbi internationalization, if we can establish a system where we have to rely less on what today is a very narrow set of currencies, predominantly the US dollar, and we can create a more balanced payment system where we have more currencies, more pools of liquidity, then I think, you know, it would help making the international monetary system, you know, a better place. So that would be my perspective when it comes to, you know, the Bretton Woods, underlying Bretton Woods idea.
Very good. Thank you. Any other comments, Dr. Caudevilla?
No, I mean, I fully agree with Ousmène. Basically, well, the idea is precisely to create or try to achieve a much more inclusive financial system where transactions have like lower costs, etc. And in that sense, CBDCs may prove to be an effective tool. I mean, of course, it may be too early to say because so far, like we just saw like a few countries testing them, etc. But based on what we are seeing so far, it looks like well, we may achieve this goal someday in the near future. So in that sense, I think it's quite exciting to see how this topic keeps evolving in these years to come.
I think at this point we need to bring the session to a close. I want to thank everyone for attending, participating in this session, and especially to Dr. Mandeng and Dr. Caudevilla for giving us this insight into this growing interest into this area. This is a very, very important topic, and I'm sure that our faculty and students at different universities who are participating in this session, and in the future, they will use the recording of this to share with their students and their colleagues. So with that, I want to thank you and Accenture for making that arrangement with Dr. Mandeng and the kind support from Ripple, who made this possible as our financial support was provided by Ripple. So I want to pause here and request Dr. Mandeng to share some information about a very exciting event that he is organizing for, I think it's the third week in April. It's on this topic. If you want to get more information, it's a in-depth kind of treatment of the subject in a conference that the London School of Economics is organizing with Dr. Mandeng at the helm. And would you say a few words on that, Ousmène? Thank you.
Thank you very much, Ali. No, that's splendid, the publicity you offer. Yes, on the 22nd, 23rd of April, the LSE, the School of Public Policy, and the Center for Macroeconomics will hold a 5-panel conference where we will talk about CBDC. One session will be on CBDC in international payments. One will be the legal dimension of CBDC. One will be on interoperability. So this will be to discuss at the technical level, how can we ensure interoperability between blockchains? One CBDC in a retail setting, and then one on fiscal operations. How can we use CBDC for advanced and smart taxation? So absolutely, Ali has the link. Please take a look. And if you're interested, register, and hopefully you can listen. This will be starting, it's relatively early for you, I think 8 or 9 o'clock Eastern time on the 22nd of April.
The link is going to be posted on our website, and we invite our colleagues at all the other universities to participate. And again, with that, I want to thank all of you and my team at the FinTech Center for making this possible, making the arrangements, Judy, Tainisa, and Sanjay. Again, be safe. Thank you so much. See you next time.